Hi, it's Larry Gaines from Options on the Open. In this video I wanted to take you through my weekly preparation and daily preparation of how I get ready and formulate a trading plan. At Options on the Open I start out each week and every day with a trading plan. And my trading plan will look at the following factors. We'll look at the power cycle trading model for the current long-term trend, short-term trend, intraday trends. I will review market statistics that would be pertinent to the current situation we're in, any major fundamental events, any major market events, and then I will review all support resistance chart zones for the broad market indexes and for those particular stocks that we are trading. Now, as a trader, you need to be prepared and know your markets in order to be able to respond to what the market gives you to trade. So it is, important to have as much information and have a plan formulated ahead of time so you can react. And by having this plan, you'll be able to quickly recognize market opportunities and whether the markets are showing you setups for a buys or sell. So it's a preparation that you need in order to be successful. Now, with the power cycle trading models, this is a patent pending price cycle model that we use for all of our trading for short-term intraday to longer term and for market timing. Using this model, I will look at the long-term trend, which based on the model is currently down based on a monthly macro time frame. I will also look at the weekly trend, which just turned up based on this past Friday's close. I will look at the intermediate trend, which is up but in overbought territory. And then I'll look at the short-term trend, which is also up on the cycle but also in a overbought territory. I'll also review market statistics and to look at various statistics that have occurred in this time frame to kind of give you an idea of what possibly could happen. And just based on where we are today, according to the National Association of Investment Managers, they're very bearish. These managers' net exposure to stocks right now is zero. So if they're long something, they're short something against it. And there is a minus 130% difference between the most bullish and most bearish. So this is the second most negative spread since 2006. So that to me shows you how maybe overdone the market is to the bearish side, which could potentially push the market higher if everybody's kind of weighted to the same direction, or the old analogies, everybody's going to the same side of the boat, maybe could tip over. So currently they, based on this statistics, they have not been buying into the rallies, so the market's short, but they're all headed in the same direction, which can be considered a contrary indicator for stocks to move possibly higher. Another interesting statistic is that the S&P has rallied over 10% the past 2 weeks with no 1% drawdown days. And this is coming off a 52-week high. A 52-week low. Since 1928, since these records have been kept, this type of price action has been seen 5 other times, and those are listed here. In 1942 led to immediate failure. In 81 led to a 30-day rally, then a failure. 82, a major bear market low, no pullbacks. 84, a 4-month of choppy markets sideways, then a rally. In 01 led to a 3-month rally, then a failure. Also, the fourth quarter of most years is positive, up 73% of the time since 1928 and up 80% of the time over the past 30 years. If the third quarter is down 10% or more, then the fourth quarter has been positive 7 of 12 times, excluding 2008 and 7. 7 of the last 8 occurrences were positive dating back to 1940. Now I'll also review to see where we are within market fundamentals, just to have a broad feel for that. And the current fundamental events, I think everybody's pretty aware of that. The European Union banking crisis is still front and center, but there has been more positive news over the past 2 weeks. This positive news is basically that they are working to fix the problem, but with very few details on how. Markets and traders are still very leery and cautious of the markets, just waiting for the next big negative event or events to happen. So the markets are jittery, but they've been climbing that wall of worry. Markets have also just entered earnings seasons, and so far the technology sector has shined with positive results, counteracting any of the major bearish signals coming out of Europe. Google being a prime example of its explosive earning results this past week. Now, market events. This coming week of October is option expiration, and sometimes many crazy things can happen in that particular time frame. In the past, this has been a modest upside bias since the inception of the S&P 500 futures, and this has been 19 out of 29 times, or 19 out of 29 years. So this has been a little bit of an upward bias, a slight edge to that direction. Now, the next thing that's very key and important, after all those factors that I just went through for setting up a trading plan, is to know your market and to know where you are within the market. So to do that, the main thing to follow is the S&P 500 index, the SPX or the SPY, the spiders, to show you the direction of the market, the broad market direction. Now, to do this, I've got this set up on a daily chart, and I'm just going to go back and start from kind of ground zero. But you probably know that there's a head and shoulders formation that's been talked about a lot. So here's a shoulder, here's the head, here's the shoulder, and here's the neckline. So this was broken, and you had a major sell-off to measured move, which came in down here around 1100, right about in here actually. So it made this, this price target or price target based on the fall-off. And then we've been in this sideways kind of chop for the last 3 months. Rallying from this August low up into this September high, and then we had this candlestick bearish formation here. We had a sell-off, another rally, a lower high, another bearish candlestick formation here, this shooting star, and another sell-off. And then we've had this current rally of over 10%, almost up to 12% from the October 4th low to the high right here. So the extreme move here, we're currently in a very overbought situation, but we're breaking through some of these major resistance zones. So the key to this market is to watch this zone here. So this 1230.70 to say 1240. This needs to be closed above on a closing basis, and then if that happens, we can definitely see a retest of up here to this 1270, the neckline, and that's usually a technical retracement that happens. So these are the moving averages. Here's the 50, we're over that, the 20, here's the 100, and the 200 up here. Based on the macro trend, the power cycle trading model, we're still in a downtrend, but within bear market downtrends you can have some very major bear market rallies, and currently we're experiencing that right now. Actually, the power cycle trading model did have a cycle turn to the upside on actually October the 4th right here, and it is still currently in an up cycle, however approaching overbought situation on the top of the pricing channels and other technical indicators that it uses. But right now it's still up, so anything can happen. But be aware of this critical area here, and if this market cannot get above this 1240 level, and close, then we could see it fall back over. But there are a lot of indicators in the market showing that potentially the market might try to break higher, and we're in the current earnings seasons. We've seen Google have this tremendous impact on the market last week, this particular day here, and we've got Apple coming up this coming week. So Certain major earning surprises to the upside can definitely give the momentum to possibly push this market higher. So be aware of these factors. We are currently, though, overbought. So what I will be looking to do is wait for a breakout. If it breaks higher, buy into the break on a momentum, but sell into that momentum as well. So short-term trades to the upside, and then take your profit. That's what I'll be looking to do. And then if it closes above this 1230, 1270, this 1240ish level here, and consolidates, then I will look to buy on pullbacks, because this will become support, looking to possibly move up here to this 1270 area, the next resistance. If this cannot get above these areas and consolidate, then we can see a nice move back down. So be prepared, have your trading plan together, and come join us at Options on the Open to learn more about how we trade and how we use our patent pending power cycle trading model. So thank you very much for your time.